Okay guys, this is another video that I would like to explain something to you guys real quick. Let me start all over. Let me draw this all over. So look at this. This is what I will use the chart as an example. This is what I want you guys to pay attention to. Look at this. Whenever you see the market trying to do this, don't fall into the trap of trying to buy or sell in the direction of the support and resistance. For an SMC student, we only need to wait for market to come back and take one of the last pullback. So if the market is going down, first impulse correction, impulse correction, impulse. The correction must go and take out the previous correction, then come down like this and give us a break of structure. So this is what we classify as a break of structure. Not this. This is not valid. This is not valid. This is not valid. This is just impulse and correction. But if you are looking at break of structure, the market must come back to take at least one of this correction like this. So this, after taking out this level, we have this level. We used to call it inducement. Some people call it liquidity, whatever. So once you identify this, we have a break of structure now. So after that, what are we going to look out for? We look for the same scenario again. Markets in some another situation can do something like this. Market can give small impulse, correction again. So look at this, pull and correction, then impulse. This is not a structure. Our range is from here. Our range is from this side to this side, but to this side. Now, but before we can establish this one, market has to do something like this. Market need to go and take out inducement. The moment we have this taken out, then this low has been established. So we have the range. So this level will serve as our inducement because it's the first pullback. Market can went back as far as this, but all that matter is first pullback must be taken. Once it's taken, then we establish the low. Then before we can say market has completed its pullback, then it must come and break this level. So in the scenario that we have something like this, markets push down, then drop, create low again. So in this case, our first IDM inducement will be here. Before market create this one, we shift it here. Once market create another one, we shift it here until we break this level. So once we break this level, then we now look for the recent one, which is this was when the market was here. But after market broke this level, then this will serve as our recent IDM. So in order for us to have a break of structure now, in this case, this break of structure has been confirmed. So the criteria is for break of structure to confirm, you must take out inducement and must come and close below. So in this case now, we are ranging from here. Now this is our high. Any attempt to break this level will serve as a change of character. So, and as you can see, if the market go back and take out this level and come down and break down, then we have another break of structure. So it's as simple as that. Sometimes the market might be complicated, like something like this might confuse you. Market will do this because this is the best way you can filter out the noise in the market. Market can do this. All this one is none of your business until this low has been taken out. Once this low got taken out, now you know that you have a range from this highest level that the market created. Then you wait for this pullback to be taken out. So before the market take out this pullback, another drama can still happen. Market can still play his game, can still do this. After doing all these things, take out this level, you will do this, you pull back, As long as this market is trading below this level, we are still bearish. And once the market take out this low again, break this level, then that's when we have a change of character. So the point is, just identify the swing high that is valid after taking out the inducement, and when the market breaks structure, then wait for the inducement to be taken, the first pullback, either small or big, wait for it to be taken out. The rest is a noise because you have a range already. So that's just it. So then let me show you on the chart so that you understand how this thing really work on the live chart. Let me close these ones. So look at this. We have a market was giving us bullish momentum from here, but look at this. When market got to this level, we started seeing some bearish momentum. So we have something like this. Markets break down, like give us something like this, pull back, something like this. So as you can see, after market did this swing guys, impulse correction and so on, market had to come back for this, and you see what happened. Market went back, then drop. You see, drop. So let me use a clear chart for you to see this instrument. So look at this. So in this case now, all you need to do is to just look for something like this, then wait for market to pull back in order to clear where the direction is going, then allow that market to come back and break this low. So when the market come down and break and close below, that's what I'm saying. Break and close below. It has to break and close below. We don't consider sweep as a break of structure. So in this case, we have a valid break of structure here at this level. Then where is our last pullback that we have? Look at this level now. Where is our last pullback? Look at what the market was doing on its way coming. Market push down, push up, then sweep this low, then push back, then sweep down. So this is where we have our last pullback. So in this case, what are we waiting for again? We wait for market to come here like this. But unfortunately, market refused to come down. Instead, what market did was to, because this one, all this pullback is not valid, it's inside this one candle. So this pullback is known as one leg. So market tried to do something like this, then drop, then pull back. So for the fact that market was unable to come here, it created another low here, another low somewhere here, sorry, yes, somewhere here like this. This is what market did. It created another low somewhere here. So if you look at it closely, we have this one leg like this. Market tried to pull back because this one is not valid, so it's as good as we have this. The market pull back, then do this, then this is a consolidation. In between, all these candles are inside this one. I think I will have to do video on how to identify when the pullback is valid and when it's not valid. So, and as you can see, market did all that and finally pull back and take out the market. So we have our swing low here. Let's just go straight to the structure mapping. We have our string low here. After that, market took out this level, which gave us a break of structure. Market took out this level, not by candle wick but candle close. So another one, market went back and give us pullback, create first inducement here. Then on its way coming, we refuse, because on its way coming you can see something small like this, something like this. Then it means that our last pullback is here. Then market actually went back and take out this level. So we have a break of structure here again, because of what? Market took out inducement. It took out liquidity before it dropped. And look at it, whenever market took liquidity, it dropped massively. Pull back, took out liquidity, dropped massively. So as you can see, despite the long drop, but because this liquidity has been taken out, this level is already like a POI, but I don't want to talk about POI now. So because market has taken out liquidity, look at this, market went back and mitigate that level and drop. But according to this video, we are not talking, this is not break of structure. Why? Because no inducement was taken. According to some people, it can be break of structure, maybe based on 15-minute time frame. This is not break of structure. It can be a break of structure in 1 hour or 5 minutes or whatever. So but what we pay attention to is this. Where is our last break of structure? Look at this. We have this, then market drop, break this level. So this is not a break of structure, as I said. So where is our inducement? We wait for this level to be taken out. And as you can see, market came there nicely and break and took out this level and drop. So where are we now going to have our break of structure? Because this is the swing low. This is not break of structure. This one is not break of structure. Then we wait for this again to take in, because remember I said not a swing sweep. We are talking about market close. So this is where the market closed below. So now it means that we have our range from here, from this level. Then we now wait for market to create an inducement. What is their first inducement? This level is our first inducement, but market first attempt was unable to take the inducement. Then second attempt, market creates inducement again, so we have to shift this level here. So this is our inducement, and as you can see, this high must be protected, and as you can see, market went up, take out this inducement and close below. Look at this. Then we now have a break of structure here. So after break of structure, it means our swing guy will come here. Then what are we looking for again? We look for another pullback like inducement. Look at this. This is our first inducement after this level was taken out. Then you see market make an attempt, the same thing it did here, but it failed. So it means that it creates another what? Another pullback. So like this, it means we have something like this. Sorry, it means we have something like this. First attempt, then like this, then break. So it means that this is not break of structure. This level serve as an inducement for us. So let's go and see what the market do next. You can see market came back by doing all this noise. These are noise. All the market is looking for is to come and take out this high. Nothing more. Market just want to come and take out this high. So looking at this scenario now, you see what the market was doing. So where is our inducement and where is our break of structure? Our inducement lies here and our break of structure here. Why? Because market has taken out inducement. So you see that all this thing is about liquidity. Before market can really move, we have to do that. We have to take out liquidity, take out inducement. So if you know this, you will know your trading range. You will be less confused. You will be able to filter out the noise in the market. Look at what happened again. We had something like this. So when market break this low, where is our last pullback? This high, because this is what we have. Market pull back, but it created another low. Then we have another pullback, then it drop. So where is our IDM inducement? We have it here because this is our last pullback. So as you can see, this is our last pullback. And what the market do is to do what? Is to go back and take out this high, mitigate something and create another break of structure. So this is confirmed. This is break of structure, this is break of structure, because market take out the previous pullback before it completes the moves. So look at this. After that, what do we have? We have another scenario like this, from this level to this one. You see small pullback here, you see small pullback, you see market sweep this level, create pullback and drop like this. something like this. So you can see what the market do is this. If you look at it closely, let me show you. If you look at it closely, you will see that market actually created pullback here. From as we are coming from up, sweep this level like this, sweep this level, create pullback, push down, pull back, then push down, then pull back, try to buy, then now sell. So it means that where is our last pullback? This level. So this level rests as our inducement. So we wait for market to go back and take out this level and do what? And close below this level. So in some cases, markets go far like this. For example, in this scenario now, look at this. Market is targeting this as a liquidity, but on its way to go and take out this level, market can go as high as this before it drop. In fact, market can take out this level, sweep. This is what we call external liquidity sweep. It means market need more liquidity before it drop. Not that it will just take out this level, the first pullback, and sell. No. What we need to confirm break of structure is one of the pullback must be taken out. If you have 3 pullbacks here, the first one must be taken out. So that's when we'll be able to confirm that this is a break of structure. So let's go and see what the market did here. Look at this. After break of structure, what do we have here? We have something like this, push down, attempt, the market drop. So it means that this is our liquidity zone. Remember, no almighty strategy. When market is serving you, this is 15 minutes. It can also be serving some people in 1 hour, 2, and so on, depending on. So you just have to master one time frame. So you see what the market did. Market refused to do what? Refused to respect this level. So we have what? We have change of character here. So what we need to position for now is to see whether market will, now that we have change of character, is to now mark our inducement, because this sign shows us that market is telling us that I want to go up. So we mark this level as our inducement. Why? Because on its way to go and change that character, this is the movement. So it shows that we are not selling again, we are looking for buy. And as you can see, market came back again. Instead of it to respect this low, it refused and break again. So it means that in some scenario like this, we have double change of character. So it means that market still tell you, say, sorry, I'm not going down again, I'm not going up again, I'm going down. So in this scenario now, your bias will change from buy again, the market gave you here, to sell. So what are you going to look for again? The same criteria. What the market do on its way to come and give us change of character. Look at this small pullback. Look at this. Look at this. The market drops. So where is our IDM, which is the last pullback? This level. Then this high must be protected if the market really want to go down. So, and as you can see, market did what? Market took out this level. Market took out this level like this and push up and do what? And mitigate something here, and you see market came down, break of structure. You can see. So let's even say you had a loss here, definitely you have a win here. So look at this. So the sell momentum is still continuing. All these, don't be fooled by all these. All this is just the act of taking out liquidity. It is still coming down. So, and you see immediately it has done taking out liquidity, taking out inducements, mitigate whatever I want to do. You see the way it dropped sharply. So that's how the movement continues. And you can see after that, where is our last pullback? You can see market did this. Let's mark the pullback from here. It's obvious that we have this, we have this, we have this, we have this, and market drops. So but in the attempt that market want to, so where is our last inducement? we have our last inducement here. But if you look at it closely, we also have a kind of small pullback here. I don't know if it's valid. Let me check. Okay, this one is not valid. So this is our last inducement. So what are we going to wait for? If before we can sell, market must come back from this high. He must. And he tried to do what? He tried to create another inducement here. But looking at this closely, I discovered that market created another low here. If you look at this, market push back, then close below here. Not close, sweep this level. So it means that our last pullback will be here, because market refused to come here and close create another pullback. And you see, despite the fact that it's small, market still went back for that pullback, sweep it, then we now have what? We have break of structure. Why? Because inducement was taken out. So this is not break of structure. 1, no inducement. 2, it did not close below, so inducement was taken out. So this is an inducement, or this one, it has to be taken out, it has to be taken out, and so on. So that's how the process continues. So in this scenario, what do you have here? It means that your range supposed to be, this level must be protected. And where is your inducement in this scenario now? You look for this. This is the pullback, push down, push back, no inducement below again. So it means that this is your inducement. So once market take it and look at it, even if after taking it, market still drop down, look at this, then break this structure. So it means that your swing high will shift to this level. So anything above here is a change of character, and you see what happened. Market swing high and change the character. So what are we looking for after change of character now? So it means that this low must be protected, because of what? We have change of character here. So this low must be protected. And what the market is supposed to do, where is our inducement here? And as you can see, on its way going, did this, change character, then push up. Then probably maybe we do another one, or but after all this, one of the pullback must be taken out. But in the current situation of the market now, look at this. This is the only pullback that we have. So it means that market must come back below here and take out this pullback before the buy can continue, because he has told us that I'm in for buy now, I'm done selling. So until market do the same thing he did there, probably maybe he did this and sell again, then we have change of character and we wait for this level to be taken out like this, then sell. So that's the process. It's not that complicated and it's very, very straightforward. So I don't want this video to be too long. If you have any question, kindly let me know. Thank you guys. Bye.